Venezuela tops measures of the world's most miserable economy, with inflation of 181% last year, a currency that's collapsed on the black market to less than 1% of its official value, and shortages of basic goods like detergent and antibiotics. It's a horrific turnaround for what was once one of the region's most stable democracies, famous for its big cars, cheap gas, and beauty queens. The price of oil, which makes up almost all of the country's export, has tumbled 75% in the past 3 years, and investors are predicting the country is on course for the biggest ever emerging market sovereign default. No nation in the world is more likely to miss payments, according to CDS prices, which estimate a 98% probability of default over the next 5 years and a 70% probability of default over the next year. So with that, let's start with the most very basic question. Diego. If and when do you expect Venezuela to default on its external bond debt? Will they make the $1.5 billion payment that's due, when is it, in 2 days?
Yep, that one is easy, yes. And the other one looks likely yes too, but I don't think there has ever been a country so committed to pay than Venezuela, because if you think about the sacrifice that the population has been enduring to preserve dollars to pay, and I'm not saying this from governance or because necessarily the government is good or bad, it's just because they know that it's essential for the regime to continue paying for imports and exports and stability. That they will likely run out of money, I think is inevitable at the current pace. So if that happens, I think that they will try to make payments this year. If you look at prices, people are much concerned about the PDVSA payments at the end of the year. I think that they will try to make them. What could prevent this? Oil moving higher, or if they pull something that they've been discussing for a while, that is some way of pushing PDVSA payments into the future. If any of those things happen, the government will try to continue paying. But if nothing happens, I would assume that next year, most likely next year, less likely this year, you're going to have a great event.
Okay. And Marty, do you have a view on this as well?
Very, very much so. The payment for tomorrow's maturity, I believe, has already been instructed, the $1.5 billion. And it's coming from the sale of gold, which they transferred in January. And a part, I'm told, is coming from the Russian Rosneft $500 million investment, and that's why the investment was speeded up. There is a big difference between having the willingness to pay and having the ability to pay future maturities, which start in October for PDVSA, not the sovereign. The sovereign is all clear until 2017. The other big maturities due from PDVSA in October become much more complicated, and that depends upon the price of oil going forward. If you look at every analyst, every oil analyst, they all say that in the next semester, oil prices will creep up to the 45 to 50 cent level. The sources of funds for repayment have come partially from oil sales and bond maturity swaps in recent past, and probably will they're counting on that for to meet the October payments. It may be a borrow from Peter, pay to Paul scenario, waiting for the increase in the oil price, in my opinion. So it's a crapshoot.
And Jaime, why don't you give your opinion and also remind everybody what you rate Venezuela and PDVSA?
Sure. No, we have a CAA3 rating on Venezuela, both on Venezuela and PDVSA. And our scale is perhaps a little bit different from our competitors, where we rate to expected loss, not to probability of default. So in this regard, we're already assessing a relatively high probability of default, but we're likely, if and when default happens, which the baseline seems to be, fourth quarter this year, we would calibrate our rating based on the losses that investors would have to take. And mind you that even if there is a rescheduling or some form of restructuring, under our definition, that constitutes a credit event. So for us, it's interesting that it's PDVSA in this case that might be the trigger that would lead to throwing in the sovereign's debt into a default scenario. We think that if one restructures, you don't go through the process of restructuring without throwing the sovereign in there. So that's basically what it is, because the sovereign has no other maturing debt this year or in 2017. This bond that comes due tomorrow for 1.5 billion, which they seem to have gotten the payment out, that's it. It's just interest for the sovereign.
Mm-hmm. And so that's okay. So that's sorry, A3. Sorry. Yeah. Okay. Now, we're going to get into what your recovery estimates are in just a moment. But before we get there, there's something else I wanted to ask you. There's all these potential liabilities that Venezuela may have from arbitration courts. Exxon, Conoco. Today, they came to an agreement to finally play gold reserve, which came kind of in a weird announcement. I don't know if everybody saw it, but they finally agreed to pay Gold Reserve their award, which is about $760 million. But at the same time, Gold Reserve is going to invest $2 billion in Venezuela in a joint venture and loan them $2 billion. So it's interesting there. I'm sure there's a great story that we'll find out one day about why they're doing this. They're doubling down. But so that kind of came into a positive light that they paid these guys, but they're getting this influx of cash from them. I don't know if everything will turn out as positively, if all their arbitration awards will turn out as positively. But do you have a view if there's a potential trigger down the line from one of these arbitration awards?
They say that, I mean, the estimates are all over the place in terms of, other contingent liabilities, unpaid liabilities that the sovereign has. Some have placed them as high as $31 billion, including arrears to airlines and other suppliers. But indeed, these arbitration cases can indeed threaten, the sovereigns continuing to stay current on debt, because there are clauses of event of default in these sovereign bonds that say that if indeed amounts greater than $100,000, that the $100 million, the sovereign does not pay on, then there would be cross defaults on all of the sovereign's debt. So the process is lengthy because, one, you get arbitration awards in ICSID, which is the World Bank body that sort of rules on these awards, but then you need to enforce them in a U.S. court of law, and then that's where a couple of the oil companies are trying to get to that point where there's a lawsuit that has been opened up in U.S. district courts, and they're trying to enforce that payment from ICSID. So it becomes a bit of a dangerous situation, but usually before it comes to that level, Venezuela's incentive is to try to find an arrangement similar to Gold Reserve, which was quite favorable, and then maybe they can expropriate again, and then we can do this dance all over again in a few years. Yeah.
Oh God, that would be great. Do you view all of these as liabilities down the road? I mean, how do you calculate? Do you see these as things that could come due at any moment, or potentially 10 years from now? Or I mean, when you're looking at their accounts, how do you view all of these 31 billion potential liabilities?
It's pretty much like a yield curve to some degree. You have some that are advancing much quicker in U.S. courts, some that are probably going to come up over the next few years. So you have points in time, over the next 10 years potentially, where these liabilities may come due. So it's very hard to tell, and it's pretty much a little bit of a contingent liability that could trigger default in addition to the other challenges that we're exploring here. So it's really anybody's guess, but yeah, they could happen at any time, even though we think nothing for the next few months.
And did either of you have a view on this, or?
Yeah, just that, in my own opinion, I don't think that that we have to worry about any enforcement situation arising during the next 24 months. I don't think it'll happen. These courts move very, very slowly.
Yeah.
And on the other hand, again, if you look at all the predictions for where the oil price will be down the road, starting with next semester, then the 31 billion, or a part of it, similar to the deal that they just did with Gold Reserve, can be engineered in the same way. You invest X, and we'll consider Y as repaid, and the deal settled. I think every oil company, if the demand situation, supply situation of oil changes, would be happy to make that deal, because nobody is disputing the fact that Venezuela has oil.
Right.
It's just a question of at what price.
Right. So, so Jaime, you view if one falls, the other falls with it, in terms of Venezuela and PDVSA. Of course, for investors, this is a huge question. Which bond do I own? Which bond gets me more money in a recovery? So let's ask that question. Diego, PDVSA, Venezuela, which one would the sovereign want to default on, and which one would you want to own in a case of a default?
That has been one of the most debated things in emerging markets, and you hear all sort of arguments that ex ante sound reasonable, and at the end of the day, who knows? I think that I tend to sympathize more with the view that they would try to protect PDVSA because it's the asset that generates the oil revenue, and that in a way you're going to be better protected, let alone for your ability to potentially seize assets overseas. And the tricky fact that none of the PDVSA bonds have collective action clauses, unlike the ones from Venezuela. Other people opine that the government can play games with PDVSA and trying to empty PDVSA and protect the sovereign credit based on that. And I think that is a valid argument too. Personally, I'd rather have on the margin PDVSA to Venezuela, but I think that you can make arguments on both sides.
So you want to have PDVSA because of the assets, right?
Yes, you're closer. It's like being kind of in a holding company versus the operating one. You're closer to the assets. But again, and in terms of the nature of the bonds, on average, the PDVSA bonds are much better to hold because they don't have CACs, New York law, except for, in particular, one PDVSA Venezuela bond that I think would be a gift for holdouts. That is the Venezuela 27, because it not only doesn't have collective action clauses, but also has pretty much the same language that generated the pari passu ruling in the case of Argentina. So, if you're going to sue Venezuela, own the 27s.
Except Venezuela has shown a very sincere willingness to pay.
Well, no, that's the issue.
Right?
But it's funny because the market is treating as if Venezuela is not going to pay. You have some bonds trading below the recovery level of the Argentina restructuring. It's still current.
Yeah.
So it's as if the market is saying not only they're not going to pay, but Maduro is going to stay in power and is going to continue doing a lot of bad things, and you're not going to get any recovery anytime soon. I think that the odds of all those things happen is very little.
Okay, so just going back to one thing that you said, the PDVSA doesn't have CACs. How does that work in terms of a bankruptcy court? PDVSA is a company. Would it go into bankruptcy? How does that actually work?
Yes, definitely you would sue bankruptcy in New York, and you would sue PDVSA and the owners of PDVSA.
Okay.
And then the owners of PDVSA is Venezuela.
And do you think Citgo would be on the table?
Citgo, I think, will be in the table. Whether you can get something out of Citgo based on that and the valuation, and actually, obviously, Venezuela has been reducing the value of Citgo quite a lot by leveraging, but at least you have something. And it's kind of, in a way, if you see how tough it is to sue countries, it's much easier to sue a company. Mm-hmm. So from that standpoint, I think that it might be better to hold PDVSA in a more predictable way, but
So of course, all of these assets, these wonderful PDVSA assets, are all oil assets. In this environment, what is your recovery price for PDVSA?
look,
If that's what it's based
I
on?
have a very simplistic view regarding Venezuela in general. If you look at $60 billion of debt plus, let's say, $30 or $40 billion of additional liabilities, you come up with a country with $100 billion of liabilities. If you take the most conservative oil reserve analysis that you do of Venezuela, OPEC, BP, you're talking about at least close to 300. But let's say that you have 200 billion barrels. Put a price of 5. How much wealth is that? 1 trillion. So you have a situation of a country with $100 billion of liabilities with $1 trillion of assets. How does it look as a balance sheet?
Right, well, you have to get that oil out of the ground.
No problem, but at the end of the day, it's wealth. I think one of the things that people underestimate in the case of Venezuela, with all the problems that are on top, that a lot of the wealth of Venezuela has been safely beyond
Yes.
the value. And I think that connects to the previous point. You get the right government there, and Venezuela could elicit a lot of interest with oil at 30 because it has a lot of oil. It's not a matter of price, absolute price. If Venezuela had the right government, it could survive perfectly fine with the oil at 30. Look at Saudi Arabia.
Right.
So from that standpoint, I think that recovery is highly underestimated because I think the best trade would be just to hold out and wait until you have a decent government, and you're going to get at least the recovery that you got in Ukraine, that it was close to 70.
So you're thinking at least 70 under a good government.
Yes, if not, you hold out. At the end of the day, you have perfectly structured New York law paper. You know, it took Elliott, if they settle, 12 years. This is going to be much sooner than that. Because I don't think that you're going to have a Kirchner-type government following this one. Chances are that you're going to move in a completely different direction, similar to what happened in Argentina.
Okay. Well, we'll get back to regime change in a little bit. So Marty, what are your views?
I agree with most of what Diego has said, except at the end.
Except at the end.
70 cents, I'll take it. But I agree that the 2027s of PDVSA are the best investment, without question, because of the size and because of the liquidity. The least valuable, which I don't think you mentioned, would be, in my opinion, the sovereigns 2018 and 2034s, mostly because of the CAC issue and the requirement for creditor agreement. I think it's 85% on those, which is going to be more difficult. Is a bankruptcy more difficult to claim against than suing a sovereign under New York law? Probably. Well, I would defer on the answer to that, frankly, to a lawyer. But I believe that it's not going to be a quick bankruptcy, as Diego seemed to intimate, because a bankruptcy of that nature is going to be very difficult. Also, to lien against the assets, tankers, ships, refineries, which refinery is all, most of the debt is pledged anyway. So most of the assets are under Citgo. But I think it will take a long time to collect under a bankruptcy of PDVSA. On the other hand, I think in the case of the sovereign, it'll be equal or a worse mess than Argentina. Now, that assumes that this government stays in power. And that's the big question out there.
Okay, so you're saying difficult bankruptcy proceedings for PDVSA
Yes.
and a worse mess than Argentina. So both are terrible, is what you're telling me, right?
Oh, I believe that the mess will be much worse than Argentina.
So, but between PDVSA and the sovereign, you've given me bad and bad, so
Well, but less bad for PDVSA.
so less bad for PDVSA,
Yeah.
even though it'll be lengthy.
Also, you're assuming that PDVSA is leaving its assets all in place, and where a creditor is just going to put a lien on all of them. You can be sure that even today, they're having all kinds of meetings as to where they're going to put PDVSA assets so that they're not attachable in the case of a bankruptcy.
So what is your estimate that those assets will be worth for you as a holdout?
Oh, I would
Presumably
say 45 to 50 cents.
45 to 50.
One thing that, and not to dwell much on the topic, that I think is very important to not to lose perspective is that Venezuela, in the current situation without oil, doesn't function at all.
Yes, exactly.
And that's why I think that both recovery and resolution comes not necessarily because the process looks easy given how big it is because there are going to be few times in which a debtor in default would be so desperate to reach an agreement to return to normality, because I think that's a big difference between this case or Argentina, for example. Argentina got all the foreign currency out of export from the private sector. Here is all linked to productive assets that need to be exported. And they belong to the government. The ability to disrupt that is huge. So the incentive for a fast resolution of some sort is going to be huge. So I think that investors will have much more leverage than other cases because of that.
So just practically speaking, because I like specifics, how would you go about disrupting the oil export?
Well, we're not in the business, but I think that the people who wrote the book about that, are still fighting Argentina.
But those people,
but you see, those people are seizing assets and trying to get injunctions, suing people who do business with them. So, for example, I'm sure that if a lot of the oil of Venezuela ultimately gets exported and refined in the U.S., sue the tankers, sue anyone who's involved in that business. You might be able to do it, but I think one of the things that Venezuelans are aware of, and that's why they don't want to default, is because in order to do that, their cost of oil from being $5, let's say, below WTI, is going to go to -10 or -15 because of the cost of structuring everything to avoid seizure. And if you think about how much money they're going to lose because of that, they realize that it's better not to default. So let's say that they default, but they will have to prevent all that noise, because some of that noise is not about actually seizing the asset, but it's about making people miserable. Elliot didn't want, or Singer didn't want to seize the ship in Ghana because he wanted to sail around the Hudson. Okay, it's about politics, about disruption, and in this case, it's going to be much easier to disrupt because they are exporting out of the government. That's kind of the thesis, and it's going to be forcing them to fix it because it's going to have a monetary impact.
And
Just a comment.
okay.
As a creditor and also as a debtor, the best course of action is to both sides to sit at the table and do a quiet restructuring of the debt, because you know if you restructure the debt far enough in time and properly, that everybody is going to get paid, because I don't think there's anybody that believes that oil is going to stay at 30 cents forever. It may not go back to 100, but it's certainly going to go back to 50, 60. At 50, 60, they make money and they're able to pay the creditors. So why go to a lawyer's dream, and that is a bankruptcy of PDVSA, or on the other hand, fighting the sovereign and going on for 15 years and having to come to the same result that you could come to today.
Divorcing couples should take your advice as well, because that's, but there's always something political, there's always something, that people want to recover more, and the other side, and there's these, begrudgments and, these types of these grudges between the two, so it's hard to take that.
Well, that's true, but I think a creditor in bankruptcy would rather get 100% if he bought the debt for 30, 20, or something close to that, and get it today, tomorrow, than sit there and wait 15 years.
Right. Sure.
Because the legal fees will eat up a good part of what you're going to get.
And your sanity.
That's true also. But that's his business. In the case of Singer, that's his business.
I'm not saying he's insane, by the way. I'm just saying it's a costly procedure for everybody. And Jaime, so what is your view about what the recovery, which is what you guys really specialize in?
I'm really happy to hear what Diego and Martin say, because we're right smack in the middle of what they're saying, and it's not just to keep friends on the panel. It's something we've held this view since January of last year when we downgraded to CAA3. So we're expecting at this point an 80% probability of default and a recovery of between a loss of between 35 and 40%. Okay. So a recovery of around 60. Just about 60,
and that's
65.
On all of it, or on which ones?
We've treated everything the same on PDVSA and the sovereign, based on the fact that you can argue every which way, how much, whether they're going to segregate one from the other, or how much on one and how much on the other. But basically, we just took to the numbers, looked at their long-term balance of payment sustainability, and then saw what net present value discount they would need in order to make, however that happens, whether it's kicking maturities down the road, as Martin suggested, or lowering interest rate, or a combination of that and a haircut. But this is basically the net present value calculation that we come at to make balance of payment sustainable. Mm-hmm. That assumes that in the event of a default, the authorities look at that as the baseline for negotiating the debt relief that they need. It could go either way. The sovereign might simply decide to kick the scoreboard because it doesn't like the score, and then go for something more. There's always these politics that you have to factor in, but based on the numbers, this is our baseline, and that's why we have the CAA3.
And you had said that you see this playing out worse than, potentially for the sovereign, worse than Argentina.
Yes.
I want to know, I guess we could think of two different scenarios, right? A scenario in which we have a different person in power, a regime change, and one in which we don't. If things stay status quo, are you all envisioning a moratorium? No talks with creditors for several years? You think that this goes faster, as you mentioned, because they need to get it out the door. But there is this fear of the people running, the bus, or driving the bus, if you will, don't really, may not do things in the most, logical way.
On the contrary, he's expert on driving the bus.
You're saying if the oil price stays the same, what happens?
Right, and does everything just shut down, and they're like, we can't even import food. We don't even have food. We're going to prioritize this for a while. You guys back off. They misalign priorities, right? Misprioritize things, and things don't go so well.
If the oil price stays the same, and the situation internally gets so bad that the consumer can't survive under these conditions, and you can't have economic reforms and foreign exchange reforms that is desperately needed in the country, then you have chaos. And the situation will be much, much worse than Argentina, because the thing, in all of the worst times in Argentina, and Diego will admit this, that in the worst times of Argentina, this was never the case in Argentina. Mm-hmm. There was never economic chaos in the country.
Well, there was. It just
not. Yeah, but you didn't see it in the streets. You didn't see it in Venezuela. You see in Caracas. You see it in the streets. You didn't see it in Argentina.
It's just bad and terrible. Is what I would say.
It wasn't the old Argentina.
Degrees of. I think I feel like it was on a panel here that someone once said Venezuela is evidence that there's no bottom to hell, or something like that. It just keeps getting worse and worse.
But let's take the situation, let's take the situation, it stays the same. and you have chaos all over the streets. A new government, then, the opposition then comes in, or the military takes over again. So these are your two choices. If a new government takes over composed of the opposition, obviously they're going to ask the creditors to come to the table to restructure the debt.
Right.
That would be their first move, because it's the only move to make at that time.
Right.
So the question you pose is very interesting. Does anybody on this panel assume that the oil price stays the same, that Maduro stays forever under these circumstances? And the third question, does another Chavez out of the military takes over? This is the key. This is the issue.
It's the worst case scenario,
Exactly.
I would imagine. But I mean, if this government stays in power, who is saying, okay, we need to solve this immediately, right now, make sure our oil shipments keep going? I mean, do you think these people are capable?
I think that it was very telling that Salas is out and that Perez Abad is in, and I think it's a recognition of what needs to be done. I think these people know perfectly well that what needs to be done. They don't do it because they don't think that they have the political power or wherewithal to do it. I think, and I don't consider myself an expert on Venezuelan politics, more of an aficionado, but I think that these smell like regime change, sort of end of a regime as I've ever smelled one. Now, it's not unlike what happened, not to bring the case, but it was brought a couple of times, the case of Argentina. 2 years before, there was an election and everyone knew that the Kirchners were over. It's hard not to feel that it's over. Now, the question is how they live, how they control the exit, and try to avoid social chaos, because social chaos is difficult to control, and obviously you get people on the street, you end up in jail, or worse. So for me, there is a fine line between trying to keep the status quo while you can, and at some point in time, quit while you're ahead.
Yeah.
The situation is not sustainable. You have lines that they're going to get worse. So either you promote a regime change under your terms, or reality imposed on you. That this doesn't last through the end of next year, I have no doubt, unless you have higher oil price. So the question is either you have default provoking the regime change, or ultimately the regime change comes in. And I agree that at some point in time they're going to have a restructuring once the regime change happens, but much more orderly and with IMF help and prices higher nonetheless. So I think that now they recognize they need to do something, and they started doing what everyone said. What do they need to do? Devalue and raise gasoline prices.
Yeah, but those.
I agree. Too little, too late. At 30 is useless. I know, but they are moving in the right direction. This agreement with gold, the discussions with China, the discussion with the banks could not talk to Salas. Come on. Okay? Now they can talk to this person. They are trying. I don't think that they are likely to succeed, because I've heard it from fellow investors. There is no serious conversation to have with these people. Bring someone serious and we will sit down and negotiate. So it feels that something will happen from the political standpoint sooner rather than later, and it doesn't have to be necessarily just the opposition alone, because I think a lot of the Chavistas realize that this guy cannot be running things.
I guess an unforeseen thing would be, right, if oil prices kind of rebound into this range where they can kind of stay afloat a little while, and then
they continue paying, because that's what they want to do. So then there is no problem, because from a pure debt standpoint, it's surreal. You have things trading at 30 cents on the dollar that are current and they pay coupon. It's not sustainable. At some point in time, it has to stop. But the question is, it stops from an economic standpoint or political? One of the two has to give.
I do like to. I do want to ask this question. I've kind of like tiptoed around it. I mean, morally, how do you all feel? I mean, about them maybe prioritizing debt payments over imports of basic foods and basic needs. I mean, do you think that it is a one or the other thing, or is this just like a super liberal question? Or, I mean, do you doubt? I mean, at one point were you okay with it, and now you're like, this is ridiculous?
I think it's ridiculous, but at some point in time, one of the things that I've always viewed is that we love democracy because people endure their decisions. And in a way, people voted for this. It's very sad, but hopefully, within institutions, they resolved it. Okay? But at the end of the day, I don't think it's anyone's fault that Maduro is in power, but the people who voted. And funny enough, usually the people who suffer the most are the ones who vote for populist governments. So I don't think there is morality in this, unfortunately. There's sympathy, but not morality.
Right. Jaime?
I mean, from the point of view of a rating agency, I don't think we can discuss morality, but I think it goes to both your points, Diego and Katia. You've written a bit about this, and it's the issue of the regime being scared to death of asset attachment, and that's why they continue paying the debt. When, you know, if you ask Ricardo Hausman, if you ask anybody, it stopped making sense making payments on the debt in 2014. Yet they've done it all the way through now. So it's a question of incentives, I think, and it's this stickiness of the possibility of asset attachment.
Right.
They want to stay in power.
Right.
That's why they keep paying to the best they can. But if you look at the numbers going
But wouldn't
forward,
staying in power be putting, you know, chickens on everyone's table and making sure they have, you know, the
They're out
antibiotics
of
they
that.
need and the
The
baby
thing is that
formula?
they're not going to be able to put
They're
the chicken
out
in
of
power
that,
if they
exactly.
stop
Chicken
paying.
in power.
they're
The
out
chicken
of
on the table. Well, maybe it would be even better to have a chicken in power over there than what they have now. But that's a separate story. Okay, let's not get into politics.
But if you look at their options, if you look at the numbers, there's no way that they can pay the October, November maturities. Because with the fiscal deficit, if the numbers are real, $25 to $30 billion, with the debt that they have to pay, and that's after, by the way, that's deficit after the payments. So where are they going to get it from? They're running out of gold. They have the best estimates I've seen is south of $5 billion in gold left. Nobody knows the real number. The net liquidity of foreign exchange reserves, I've seen estimates from 2 billion, 2 billion to 10. I've seen somebody even say less than 2 billion, who's inside knowledgeable. So with those kind of estimates, where do they get the money to pay it? China, they must keep the best situation for them is to continue to be able to deliver oil to China or roll over their Chinese obligations, which is something like $50 billion, but keep delivering oil and get more cash and use the cash to pay down the bonds. But they can only do that if they're delivering oil. And the issue that we didn't bring up, either Diego, myself, or that they stop all payments, and then what do they do with the oil that's supposed to be owed to China?
Right.
That's as much as all the bonds.
Right. And what is the Chinese recourse in that situation?
No, they have as far as the documents are not necessarily public, but pretty good cover and legal recourse, and it's in oil, so they get the oil. But the Chinese have shown certain willingness to support this. So there were rumors even today that they had agreed to postpone for 2 years the payments. That is actually not money, but it's oil. So if you can divert that oil from China to other sources, you get revenue that you need.
That's true.
Governments, what I found that governments it's not easy to really. they always find ways to pay. These guys are really scraping the bottom of whatever. But to say that they don't have the money, and again, it goes back to my first point that the willingness to pay that they have shown is just surreal, suicidal, crazy. You define it how you want. But I would not be surprised. My sense is that they really run out of everything at the beginning of next year. But they can go through all the reserves, all the payments, get some money from the Chinese and whatever to make these payments and gain more time, because there is an element of optionality. What if oil goes back to 50 or 60? So I think it's so easy for Hausman. A lot of people said, okay, just give up on everything. You give up, chances are that you are kicked out of office. Is that a good prospect in a country, particularly after the things that they've done? No. So keep the option open. Maybe you get lucky. Maybe something happened to Iran. Maybe Iran and Saudi Arabia get into a war. Who knows? You get oil higher, they can continue doing all the things that they've been doing. And that's why, to some extent, some people want the oil to stay here so they stop doing those things and just, you know.
That's what I mean.
But that's why the economic aspect and the political is so intertwined here.
So let's move on more forcefully to the political. So how long, Jaime, how long do you expect Maduro will remain in office? He has increased military support, but he does a division within the opposition, and he recently stuffed the Supreme Court with 13 pro-government judges. So do you think some regime change will happen this year?
We think it's quite likely. And of course, it correlates well with the price of oil, clearly, because if, as Diego said, oil goes back up, look at that, everything looks sustainable once again. So in that regard, you know, there is enough popular discontent to change at least the current president. Whether that leads to full-on regime change and a shift towards the opposition, maybe, you know, there's a shift towards a more moderate person from the government party, sort of as a compromise. But it really is delving into, you know, a lot of uncertain territory. We think that something has to give this year. Whether or not it's because the default prompts it, or it's prompted by the default, or it prompts a default, you know, that's an open question mark I think for all of us to discuss.
And I mean, is the idea here that, I mean, in your opinion, if there was a regime change, do you have in mind a particular person that you think would probably take over first?
You're assuming the opposition.
I'm asking, is there somebody that would, if there was any sort of regime change, that you think is the most likely person to ascend power?
It's hard to see anybody from the government party at this moment. You know, your number 2 guy, Diosdado Cabello, is really, you know, involved, has been accused of narco trafficking. He's not popular. You know, there's a few other names, but it's hard to identify anybody from the government. If it's the opposition, then the natural candidate, and I'm sure, you know, we'll have views on this, is Leopoldo Lopez. But in the event of a shift towards the opposition, I definitely agree with Diego and Martin. There will be a credit event. Either it's they bring them to the table or something. But, you know, is there a medium path, sort of like a Kicillof type situation where everybody said this is not going to work, and yet Mr. Kicillof in Argentina made it work for 3 years? You know, and then you transition towards something, you know, more market friendly. It's hard to envision. Just the probability is leaning towards more a shift towards the opposition.
Because isn't there that the government can give the vice president power in the last 2 years, or I forget the specifics on it, but in 2017 they can bring their own candidate to take over, I believe, right? So, I mean, maybe that's...
But that doesn't do it. That
Right.
doesn't do it. You mentioned credit event twice. If there is a quiet restructuring, does that constitute a credit event in your opinion, which, again, gives rise to a downgrade, and also creates default.
In our opinion, it's a distressed exchange, and that is a credit event, and it's an event of default. So
That's where the
That's if
problem.
there's like any NPV loss, right?
exactly right. So to restructure and provide zero NPV loss, you'd have to probably kick the maturities, maintain the interest rate or decrease it, but then increase the amount of principal.
Right.
So in order to offset the loss from NPVs from kicking the maturities down the line, which is highly unlikely. So even if there's a minimal NPV loss, it constitutes a distressed exchange.
I mean, there was, sorry.
No.
No, go ahead.
No, one of the things that in conversations with some investors on this that you see is that the willingness to engage in conversations with a new administration and engage in the productive is extremely high.
Yes.
A lot of people are very reluctant to commit to anything in this context because you're saying, in any event, how long are these people going to last or not? And do you want the current environment to continue and facilitate it by just give them another year of runway by pushing maturities? So it's interesting how people see that it's time for something to happen, and if you have to have a default for that to happen, let's be it. But it's and that's why I was saying that this political versus economic situation is very overlapping, because there are clear solutions. If you move the payments of PDVSA, it's not that the government doesn't have problems, but it doesn't have anything to default on. But why would you do that? Just to give Maduro the chance to be for another 2 years? And would that solve anything?
So you're saying if bondholders did this consent solicitation, moved that, nobody accelerated?
Well, acceleration, I think, was discussed before. I think that is like the search for El Dorado, okay? Everyone talks about it. I haven't seen a single one,
Nobody would
okay?
accelerate.
If people didn't accelerate in the case of Ecuador or Argentina, I doubt very much they're going to accelerate anything here, okay? So the question is just mostly how willing are you to say, okay, don't worry, don't pay me now, pay me in the future, and give you more time to do things. You want to give time to someone who is doing things the right way, because in the future it's going to be better. I don't think that it is the expectation of these people doing it. Having said that, maybe the whole issue of putting now in place Pérez Abad is to start doing everything much better, and after 6 months of that and showing it, people are more willing to say, well, if you keep this, the whole thing is more logic, I might be willing to roll over my debt. As of now, I see it difficult, not because it's not economically sensible, but because of the nature of who you are dealing with that nobody really trusts.
If they did that, by the way, the pushing down of having a consent solicitation, would that trigger CDS?
That was the question I was just going to say.
Look, you're raising some interesting philosophical questions.
It's not
Okay.
philosophical.
They're not, they're real.
Yeah, no, they're real, but
I want you to
we were quite involved in the Greek situation, and the day that one thing expired was refinanced into a new one. That triggered a credit event. Who cares? It's a problem between the people who are long CDS
Right.
and short CDS. I tend to be concerned much more of default events, loss in the event of default, than a contract that is a zero-sum game between two parties. It's going to really depend on how that is done, okay? Because, in the sovereign, now you have these situations in which if you have some distress exchange, it could be deemed, okay? And I don't know if you've heard, but in those committees, you have a lot of people, and usually the argument is the people who are long CDS have a view, the people who are short CDS are a view, and they vote. And if one has more votes than the other ones, the CDS trigger or it doesn't.
Right.
There is nothing scientific, unfortunately, or legal about that. It tends to be more, So It will depend. But what I'm trying to say is that it will depend, and it really doesn't matter, because what it matters is whether they fix the liability problem that they have, and they can continue or not servicing their debt.
You say it doesn't matter, but it is a popular trade to trade the CDS curve, and
Yeah.
I am not saying, and it's ultimately the tail has been wagging the dog for long enough about that one, and you can arb one and the other. It's trading around 60 now, implying a huge probability of default. But the question is, the trigger component of that is much more subjective than it should be, to some extent, okay? Because you have so many, you have to make it so complicated, the language, that at the end of the day it has to go to a committee, and the interpretations of that usually follows whoever is long or short. Because it's not that you go to a judge who analyzes the facts objectively.
right.
You see it
It's like
over
it's
and
hedge
over.
funds and it's banks, and they
And
sit at a
depending on
table.
who's long and who's short,
Yeah.
yeah,
I
that's the
wonder,
way.
But it makes-
I wonder if there is somebody from AIG in the audience, if they would have an opinion on that question, because their opinion would probably be, in this case, much better than ours.
Right.
So
For
Raise your
obvious
hand if you want
reasons.
to. But there was also a time.
I remember being in some of those weird committees of determination,
Yeah.
and it's just surreal. When you think about what you're doing, and at the end of the day, you get into an agreement. My point is, you realize, yes, it's important for the people long or short, but from the political aspect of default, when you go back to Greece, you know, there was a restructuring, voluntary, banks were forced into it. It happened, whether CDS traded or not. You know, similar case with Ecuador. Okay, CDS in theory defaulted. They continue paying some bonds. They didn't pay the others, and nobody accelerated the ones that didn't pay because the government said that it did not. There is so much texture on the reality of sovereign defaults that, you know, defaults is just, the CDS is just one minor aspect of it.
That can make people a lot of money, but
And
yeah.
people lose a lot of money.
But there was
That's
a-
what I'm saying, zero
yeah,
sum. Some
yeah,
make, some
yeah.
lose. It's just like,
There's also the thing at one point, remember, they were buying back a lot of their own debt, and Venezuela was buying back a lot of its own debt, or PDVSA was
and
both,
that's
I
an
think.
interesting one,
Yeah.
because it's not clear how much they have to pay in a lot of these maturities, because their pension funds, the PDVSA pension funds, and different government entities, and several government cronies, apparently, own a lot of those bonds already. In some cases, they're talking about 20 to 30% of the issue.
Right.
So from that standpoint, that is also less money that is needed to make the payments.
Right. So, I mean, that was I guess that was encouraging. I remember that was a while ago, but that was pretty encouraging. I think they came to New York and they spoke with some investors about how much they own of it.
That was part of the reason why they wanted to do the swap. We own part of it. If you add a little more, you can do the exchange. In any event, is the willingness to pay, and because of that, if things continue like that, they might be able to pay at the end of the year, but then they completely run out of money. At that point in time, they hit the wall.
Do you think before a real default, we may see some sort of just a buyback, a regular liability management deal coming from PDVSA, like soon?
They are trying now. Again, this is conversations that you have with different parties about the topic. Until at least a month ago, with the previous finance minister, there was no way to conduct a dialogue, not only because of the nature of the previous finance minister, but because of the infighting within the cabinet, and everyone had a different opinion. Now, things seem to be a little more coherent. That obviously, in this administration, to talk about coherence is quite a lot, but it's a little more coherent, and you see that the measures are logical, and now they're talking about the swap again. I think the chances of a swap now are way higher than they were 2 weeks ago. It doesn't mean that they are high, but they're way higher. Before it was impossible.
Do you have any inside information that you'd like to share?
If it's confidential, we can't share it. But our sense is that yes, indeed, you look from the sovereign's point of view or from PDVSA's point of view, you look at your bonds trading in the secondary market at deep discounts, and you have payments coming due, and you figure, well, pay now or pay later. If I pay now, I get a pretty deep discounts. So if every month I start buying back a little bit of this in the secondary market without the rating agencies noticing, and not calling this a distressed exchange, then it's a pretty sweet racket that they've got there. But we think they've been doing a little bit of that. There's no clear evidence. So how this plays into that strategy of a potential swap, it comes into consideration of the Sovereign Committee whether or not even that sort of swap is a distressed exchange because it is done at such distressed prices.
Right, that's kind of another philosophical question. So we got off topic, but we were supposed to be talking about regime change. Who's going to replace Maduro, Diego? Is he in jail right now?
I passed on that one because I think that it really depends on the nature of the regime change, if it's orderly or disorderly. And I think that the odds of some Chavista-led kind of renewal of some sort in which they pay Maduro for a long vacation would make sense. And it happened in a way when Chavez was sick. So, and in that case, it will depend on who comes. But at the end of the day, it has to come out of some agreement with the opposition. Call the cynical of me, and you see a similar situation in Brazil. Yes, you love an early election, but you love the current government to really do it so bad that they don't win an election ever again.
Right.
So the best situation would be to figure out a way for this situation to maintain until 2019. And at that point in time, there is no doubt that the opposition wins with 75% of the vote, and there is no more Chavismo ever again. You step into this mess now, and you take a lot of the political cost.
Yep.
That, I think, would be the ideal situation. Get with some more reasonable Chavistas, get into a sort of a political agreement, we provide a framework, and we sort of limp until. And my sense is that a situation like that of some sort of agreement could get support from investors to try to roll over things. And in that case, the question is, obviously the next elected president is going to be from the opposition. There is no doubt about it. I think this is a disaster.
Right.
But
so your thought is more realistic.
So what I'm saying is that the next one, it might be someone
a
that we
Chavista,
don't know.
okay.
That somehow the opposition say, okay, fine, we give you the frame. There seems to be, to some extent, what is happening in Brazil. They're saying, let's keep Dilma,
Right.
and because at the end of the day, we want her to be the face of the opposition when there is an election. You kick them, you own it, and who wants to own Venezuela now? It's a tricky one.
On the other hand, if you take over the government now, or 6 months from now, you're taking it over at a time when oil prices are likely to start pushing up. You have all the room to do foreign exchange reform, to do economic reforms, because you're coming in at the turn of the cycle. And you're in a much better position than letting somebody from the present government, whether it be another military man, military people don't give up power once in. So, and they wouldn't have the power or the ability to do foreign exchange reform, which is desperately needed in order to put the country on a right footing and to be able to pay for imports and so forth. And you're giving the present government the ability to come out of this situation on a rising tide of higher oil prices. And I don't think that that's, if I were the opposition, it would not be the move that I would want to make.
If you're convinced that oil will move up, and I don't know.
From where it is.
I think it should be
Not
higher,
100,
but it's,
Right.
So I don't know to what extent the opposition is going to be trading on based on that. But
I know investors, Wall Street, they hate chaos. They have to cause chaos, but they hate chaos. Would the market ever? Do you think the market would ever support some sort of unconstitutional yanking of Maduro out of power?
as an investor, whether you support or not, you want to get paid. Okay.
Yes.
So,
That's the only
What does that
and
mean
if
for
it's
you?
someone
Would you
from the
like
government
that?
is doing it, if they, and whoever government it is, you sit down and try to get paid with that. I don't think that anything that is not constitutional is likely to be that sustainable. These are not the 70s, and for much better, I think. People seem to be much more patient with really bad governments and unpopular, and they try solutions that at least on the surface they look constitutional. So it's, I always got the impression that it's funny, a lot of the things that seem very undemocratic, most of them were constitutional in Venezuela. So it's just part of, I think, for the new political phenomenon is that a lot of people run very populist governments, but in a very kind of quote-unquote democratic way.
Right.
So I think that whatever happens there should be constitutional. I don't see that scenario happening.
Okay.
Particularly because whatever changes, you will want support, and I would assume that the IMF and the US would be very vocally supporting a change. And I think that if you taint it like that, you just eliminate a big part of the upside for the country.
And in your opinion, would that be like a credit positive, a credit negative? Let's say Leopoldo Lopez gets taken out of jail, he's marching through the streets, or I don't know, I shouldn't be saying this, but in this ideal scenario, right, where the opposition
It's more like
candidates-
military intervenes or
right,
something
the
like that.
military intervenes, they break the locks on the jail, and he comes out, he finally gets a pen, and Maduro's taken out of power. When you're in your position, what do you write, in your statement?
We need to reassess losses and wait and see when they call people to the table, but default will likely be imminent. There will likely be, maybe a market-friendly restructuring with some sustainable financing from perhaps the IMF, perhaps some other, sources of funds that this government wouldn't touch at the current moment. So, it throws a wrench into the equation, but it's still a really bad equation in terms of, what we're trying to measure, default and loss. Default becomes almost pretty much a certainty. Loss, then we have to adjust, and we have to see what they're proposing and what their approach is towards a renegotiation.
Okay. I want to leave some time for questions, so we'll try to wrap it up. I do want to touch on the IMF. The IMF. So, do we see that as Venezuela's only viable option in the medium term if oil stays low to kind of limp through this? Some sort of a bailout? And the government is very anti-IMF, it seems. Ricardo Hausman's obviously very much calling for this type of agreement. What are your views on this, and how quickly can the IMF come to their rescue?
As an investor, I'm very concerned every time the IMF comes to the rescue, because now they love, to do PSIs and to get private sector involvement. So I think that it wouldn't be necessarily pretty for investors if the IMF comes in. It's hard not to see that in case of regime change, the IMF will be called in, and it's going to be part of an overall restructuring. I don't see these people calling the IMF, and if they call the IMF, I don't know what the IMF is going to say, because there are so many distortions that you run an Article 4, and what do you make out of that country? Yes, move the gasoline from 3 cents in dollar terms to 130. So yes, you multiply it by a lot, and now you multiply it by that lot elevated to the cube. It just the distortions are too big to have any program under the current environment. But at some point in time, all that is going to explode. You're going to have a new administration with the IMF, and the IMF, chances are, is going to participate only if investors also take a haircut.
I like that you're saying that the problem is too big for the IMF, in a way.
Well,
it's because the government wouldn't want to call
it's
them
too
that.
big, because for each kind of problem that they deal with, they have a quota for the countries, and the quota is a fixed percentage of what is the allocation of the country, and usually the problems are big, and they need some sort of consensus. And also they develop this concept of moral hazard that to some extent is true, that they don't want to show up and help pay in part when they are having capital at risk. So that they are trying to make an example of those situations is clear, and in some cases more than others. In this one, I think is likely to happen. Although part of me, in the case of Venezuela, still think that this is more of an issue of liquidity than solvency. Because it goes back to the point before, the country, run the proper way, is a very rich country. Okay, so yes, now they have a liquidity problem, but it's not that if with the right administration they shouldn't be able to pay. So whatever haircut shouldn't be that high based on that, but it might require really postponing payments and grace periods, long grace periods, just to eliminate any cash flow need until Venezuela recovers.
What do you think?
They haven't been there since 2004. It would take a long time for the IMF to get started there. And I think by that time, you have more than an increase in the oil price. You're well into 217 or something like that. Also, the IMF would only go there, I believe, in the event of a new US president sitting down with them and saying, let's help Venezuela. Certainly it's not going to happen with President Obama. And it would depend very much upon the next US president. So I don't, like Diego says, I don't think the IMF is an issue for right now. Certainly I don't think that a Maduro government would request the IMF to come in and show them how to do a foreign exchange reform or to do an economic, wholesale economic problem. They know what they have to do, but they can't do it because they haven't got the resources to do it now. They could have done it in 2013, 2014, when the oil prices were high, and they didn't. Would a new government, an opposition government, ask for the IMF's assistance right away? No. I think that, they know what they have to do. And how long it takes and what the oil price is and what the situation is with the Chinese is the big question as to whether they can do it or not. So.
I agree with both Martin and Diego. I think that the IMF would take a while because you can only imagine the first IMF mission, the people that go down there. Once they come back, they'll be very different people. It's one of these things where you go in and you go out a different person, right? We've seen it whenever we visited the country. You just the level of distortions once you're there on the ground, just to look at velocity of money and just these things are just like, they bring gray hair to your head. And so the IMF would indeed take some time to be able to be in a position to disperse some financing. And the example that you've seen so far in the case of Ukraine, for example, where they went in and the loss was much lower than everybody anticipated, with Ukraine pretty much handing a lot of concessions to the creditors. It doesn't exactly make things sustainable, and it sets a precedent where perhaps you don't want to give too much to the creditors. So it's an open question mark. We do think that a future opposition government may be inclined to looking for the IMF, depending on who are the technocrats that they put in place. Right? There's a lot of friendliness between Mr. Mendoza from the opposition and Ricardo Hausmann. Mr. Hausmann is convinced that the IMF has to be there, but there is, in both sides of the table, opposition and to some degree government, there is a relatively high level of technical ability in Venezuelan economists. So they know what they have to do, as Martin said. The question is, oil prices and how this year evolves.
I'm curious to see if in Venezuela will see something similar to what Argentina saw, which was in regime change, just like a call to all Wall Street economists and traders to come help the government, and like everyone just goes, why aren't you there right now?
Well, I know the country too well. I'd rather be here.
But it seems like it's like every Deutsche Bank trader is there right now.
Also, talk about the opposition coming in. That's not so easy because the military presence in any government, new or old, is very, very important in Venezuela. And if you don't have the military support, you can't run the country. Mm-hmm. Diego, what would you say about that?
I think that we're straying far away from the issue of whether Venezuela will default or not. So I think we may leave it up to questions and Q&A.
So let's see. We have about 20 minutes for Q&A. I just want to ask my one last question, then we're going to do that. So let's try to be snappy with this question. What does the medium term look like in Venezuela? How do they scrape by? What are the measures that we can see right now them put in place? They already did some, not great the extent to which they did them. What can they do to scrape by in the medium term?
I think the medium term should look like an inverted yield curve, where you have so much risk at the short end right now, and then the medium term perhaps a much brighter outlook. At some point, this regime has to change. At some point, there's going to be some adjustments, and at some point, the oil price should, as Martin believes, go a little bit higher, and then look at that. Everything becomes a lot more sustainable.
But specifically, what should we be seeing from them? That they can make, that maybe Maduro scrapes by without regime change. Is that not just, that's just not going to happen?
He scrapes by without regime change, which, at this point it looks like a low probability scenario. I think that you're still in for a number of distortions. It really depends a lot on the oil price because there's no other.
So far he's been doing it. I mean, I got to take my hat off. And he's really just found little pockets of cash and all the stocks in the house. It's just very, I don't know why you have that,
but how long Peter will be there, nobody knows.
Right. And what about you?
Borrows from Peter to pay Paul. I sort of agree with what you said. The short term, very bleak. The press is going to continue on this subject. They've found a whipping boy, and they will keep on Venezuela for months to come.
Well, it just got very boring in Argentina.
Well, that's it. But medium term, I thoroughly believe that the oil price will go up. First of all, a lot of oil facilities all over the place are being knocked out of business. So you're going to, going forward, be taking out a lot of supply just by banks not financing medium-sized oil companies for very much longer. Mm-hmm. And so I believe the question to ask, if I can throw it out to you, you have a lot of traders listening in the audience. Right now, at these prices, would you buy or sell? And I'll throw that out at Diego, and he's going to throw it back to me.
I think he's buying.
I like it here. But, I think the most likely scenario is regime change. But if you want to construct a scenario in which muddle through, what they are doing now is way more reasonable. They recognize what the problem is. They solve the gold reserve problem. They are talking to the Chinese to roll it over. They are really insistent to have a meeting of OPEC and Russia that apparently is going to happen. So they manage to help push oil up to 50, I would say. On top of that, they see that the devaluation and the oil price didn't and the gas price increase didn't cause riots or anything. They do the same but 5 times more, and maybe just like they scrape scrape by. It doesn't sound likely, but I wouldn't say that is impossible. And from that standpoint, being long Venezuela makes sense because prices seem to predict that everything will be going wrong. And a few things could go right, either because these people leave or because these people stay in power. And if they stay in power, they're going to continue paying. So that's why, going back to your question, I buy.
Okay. One other question.
Wait, you said let the audience ask questions.
Okay, but the subsidies are the big issue.
Yeah.
Are they going to continue with the subsidies? Because that made no change virtually in the oil price and the gas price at the pump.
Which subsidies?
Well, I think
The
that's what he was
subsidies
saying.
that they are giving
The gas
for-
cut.
Well,
Yeah, but the price didn't go up.
The subsidies comes
went
out
up.
of an effect that is completely overvalued.
Exactly.
And that is causing the whole problem. You move the effects to an equilibrium level, and the fiscal deficit pretty much disappears. So it's just like the situation over there at level is very politically and socially complicated, but it's economics 101 what needs to be done. So, and the guys now, or at least seems to be aware of what the problem is. That, in my view, is much more encouraging than what was before. That was kind of a bad version of Kichilov, going back to the Kichilov analogy. So.
I would buy selectively. That's all I have to say. Selectively.
The 2027s.
Yeah.
PDVSA 2027s. All right. So let's get some questions from the audience. You,
Oh, a lot
sir,
of them.
your hand went right up first. I think they'll have the microphone.
Yeah, thanks very much. James Lockhart-Smith from Verisk Maplecroft. We're a global risk analytics company. There were a lot of mentions through the talk, which was really interesting, by the way, that if the oil price goes up to about $50 a barrel, then that's going to help things be sustainable. The word sustainable was mentioned several times. The pre-default break-even price fiscally for Venezuela is well north of $100 a barrel. So what impact do you think that a restructuring would have on that at break-even? And are we converging towards a point where we think that in almost all post-default scenarios, you are looking at an extended period of economic chaos? Is that kind of what people think?
When you look at break-even prices of oil, I think it's a very subjective thing to some extent because until last year, Saudi Arabia had a break-even price of oil of 90, and this year I think they move it back to 68. Okay, and I think that as a country they can function very well with oil at 30, but obviously you have certain commitments that you don't want to cut, and you use different things to subsidize that. At the current rate that Venezuela is, if they get the price of 50, they can continue servicing debt and scraping by. So the thing is that at this price, if I recall correctly, they receive only $80 million out of PDVSA, when last year, with the price decreasing to 30, but let's say they had an average of 50, they received $3 billion. So the difference beyond this level up is quite a lot of additional revenue that doesn't force them to cut imports even further. That is what is priced now. Okay, one of the good things that they did with the measures is that, and you see that there is some method to the madness. They increase the 95 octane much more than the 91 octane because they want people who were using 70% of the 895 to use 30 and push to the 91 because they have $1 billion of imports for the refineries to make the 95. You know, so there are a lot of kind of silly and noticed view, but $1 billion here, $1 billion there in an economy helps them continue paying. And at the end of the day, this is, as an investor, my concern. Are they going to remain current? And if they get a little light on the oil price, they will continue the mismanagement and paying. Unfortunately, they're not going to solve the problems, but that will be something that is going to be happening only with regime change.
Yes, ma'am?
I just wanted to ask about what you guys thought about the creation of Caminpec, this new company created this month. And what does that mean in case of a default of PDVSA?
That's a very interesting development that I think from our point of view, rating agency, we're not entirely sure what it means. It could be what Diego was alluding to, a shell to start moving assets that way, preparing for a potential default, preparing, for avoiding asset seizures. But it's really anybody's guess. The government continues to create, entities that do the craziest things, and then they abandon those plans, and then they backtrack, and it's a bit of a thermometer that I think it sort of coincided with Mr. Salas being in charge. Now with his exit, will this continue? It's still always an open question mark.
I'm sorry, I want to follow up on that one. So considering that, right, the possibility of transferring those assets, would you still say that you would rather hold PDVSA?
The thing is that
Then?
on the margin, the PDVSA aspect is that in the case of PDVSA, you can sue PDVSA and the government of Venezuela being connected. If Venezuela defaults, you can sue only Venezuela. So it's very hard to disentangle. They can empty PDVSA, but it's all New York law. You go to a judge, describe the situation, and it's the same thing. So in a way, either the way I see PDVSA is either is PDVSA distinct and better, or is the same thing as Venezuela?
It does seem like the worst idea ever if you ever want to come back to markets and have a good relationship with investors, no? I mean, doing just, whoop, all your assets are gone, whoop, you have all the liabilities.
That would be a bit too easy, I think.
Answer that one too.
Yeah.
I believe that that company is designed to give the military a bit more power in the oil industry, period. And that's all.
Can you
Right
expand on
now,
that?
that's all I would have to say about that right now.
Which would
Because
make
it's a
it harder to
combined
transfer
private
out,
military company.
which would make it a lot harder for a new regime to come, right? Because if you give them more power, then that buys
It
them
would
a
be,
little more time.
well, it would be harder to sue. That's the.
It's
the
a
issue.
reflection of the weakness, and the question is also who in the military is supporting him. Is just a few generals, or all the core of the military that is in line for 5 hours waiting for food in many cases. So the situation is a bit tricky, I think.
Yeah.
We have time for a couple more questions. In the back?
Thank you, Andrew Qualley, Sidley Austin. A couple of weeks ago, a good friend of mine told me, subject to what he said is extraordinarily good sources, that there was about 10 days of reserves currency to buy the imports that the people need for food. 10 days has passed, and nothing has happened. He also said that the Minister of Defense had issued a couple of warnings, maybe one public, to Maduro, that he couldn't count, Maduro couldn't count on his coming to the rescue of the president under certain circumstances. Again, I don't know whether this is true or not, but assuming there's something to this, and taking into account what I think is an extraordinary ability of the Venezuelan people to put up with far more than I ever thought they would, I would think we're getting close to a regime change circumstance. Rioting in the streets, food rioting, which why there haven't been more, I have no idea. But ultimately, and this goes to one of the points you made, Maduro may want to leave. At a certain point, this is too difficult, and I no longer think the military can be counted upon to defend the existing regime. So I would think that there are pieces here now that would probably lead to a more comfortable regime change, let's say, rather than a bloody regime change. Thanks.
There was a question over
So
there.
was there a
No,
question
the question
there?
no, but I think I would agree that the chance of something like that sooner than later are not zero. But that's why suddenly you have someone reasonable working with you when until 2 weeks ago it was total paralysis. My sense is that someone passed a message, okay, or someone who was not paying attention. Now someone who's reasonable is empowered to do things. And again, it doesn't seem like much, and a lot of the market dismissed these moves. But what was the last time that someone coming out of the Venezuelan government did something that made economic sense? Okay, and so far, everything has been very little, but everything has made sense. And it's a shocker. In terms of kind of record, it might be kind of like 5-6 measures all correct. So there's something weird going on that I don't know if that means that he has more chances to stay or he's about to leave. But in any event, it's sort of encouraging.
But yeah, because in Argentina, we saw a bad central bank president be replaced with a reasonable one, to be replaced with a not so reasonable one again. It was volatile. It can be volatile.
The situation here is much more terminal than Argentina, short of 2001. People don't have much patience. You know, you wait online for food for 5 hours and you don't get the food. I don't know how worse than that it gets.
Katia, we have some questions from Twitter.
Oh.
One of them is, what would be your first policy if you were the finance minister right now, and what would be your first policy if you were the finance minister of a new government?
I asked that last year to Francisco Rodriguez.
Right, well, I guess someone.
Anyway.
Me?
Well, yeah, for the whole panel.
Whole panel, not me. Yes.
Well, no, I'm still with that same answer from last year, which is you need to reduce the relative price distortions that you have in this economy. So it has to be some form of devaluation, whether, you know, and it has to be quite significant because the parallel market is trading at, you know, 1,000 to the dollar. So it's you know, it's getting to a point where you really need to take deep action. Whether or not you survive your stint as finance minister after that is an open question mark, but I think that could be your first and perhaps last action that you take, and then, you know, thank you for your services. Right. So the next guy figures out the rest.
But part of the problem is that I think if you do what you need to do, you will accelerate regime change, because I think that the devaluation has to be at a minimum to 30, and that I think eliminates the subsidies from the government to PDVSA because of the subsidies of PDVSA, and ideally it has to be somewhere between 50 and 100 at least. And I don't know if the economy socially can get that without some sort of package of help from someone to, you know, to absorb, you know, the cost of food and the ability. So chances are that you do that, and it's the first step. Whoever provides the adjustment either comes with a lot of political power and voted to do the adjustment, or is going to be voted out of power immediately, and once everything blows up, someone comes and orders it.
So just be a very giving person who doesn't have long aspirations.
Well, it has happened throughout time that you get some kind of finance minister who is a sacrificial lamb.
Yeah.
The distortions are, I've seen distortions in emerging markets. The ones in Venezuela are beyond anyone can imagine, and the biggest one is on FX. Having kind of a difference between official and parallel exchange rate of, I don't know, 20, 30, 40, 50 times, it's just...
You see, it's difficult for this government to do a foreign exchange reform. If you let the Somali rate float, so let's say it floats up close to the parallel market rate, then you do the traditional thing, you knock off the zeros and everybody is happy, then you devalue the official rate so that it supports exports and so forth. But the only ace in the hole that the government has to do a foreign exchange reform is to privatize what they have nationalized. And that they are not going to do now. Only a new government that comes in is going to have the wherewithal to privatize the industries that were taken away. I mean, they're talking about nationalizing Polar, taking it all over. Why not? Because they've taken over everything else, and it's only that the owners of Polar have had the wherewithal to keep control of the company. So this is a big issue. How they get it takes money to do foreign exchange reforms. Where do they get the money? Only from selling back industries that they nationalize.
Well, one thing that I think is important to keep to mind that the parallel rate at north of 1,000, you don't need to take it nowhere near there. You know, that is highly unrealistic for lack of supply of dollars. You know, if you put a reasonable equilibrium exchange rate, you know, it's going to be, you're going to have much more supply at that level that is much more normal. So, but that's, you know.
But they have to provide that if there's no parallel market rate, that the dollars have to be supplied to an increasing market, which they don't do, because all the dollars are supplied to the so-called cronies, period.
Well, but that's why the measures are there. It's not that difficult.
Okay.
Is there another question from Twitter?
I mean, everything has been addressed. So.
Were there any on this side that I was only looking that way? Sorry. No? Any more? Okay, sir.
Yeah, that's the way.
Hi, my name is James McDonald, and PDVSA itself has ignored capital spending, has let its oil wells become extremely unproductive. There's been a rundown of upgrading equipment. And basically, PDVSA is becoming a dysfunctional oil company. So if you look at the annual production of oil in Venezuela, it's a 45-degree downward decline for the last 15, 16 years. So, okay, granted, you're hoping for an increase in oil prices, okay? But at the same time, Venezuela's ability, because of neglect of capital expenditures on its very critical oil industry, hasn't been there. So, what do you see happening there with PDVSA as far as its ability to dig the country out of a hole, even if oil prices go up to $50?
I think that's a very important point, because my read from a couple of times that we've met with opposition politicians, and the council indeed has hosted a few of them, you know, we ask, what is your plan once you get to power? Because whatever you do, as we've said here, you know, will create a political cost. So it seems that their plans are riding pretty much on addressing exactly this. They think that there's massive amounts of foreign exchange that you can squeeze from PDVSA if you run it better, if you run it more efficiently. But the reality is that, you know, you can only squeeze so much efficiency out of this company. You're going to face a declining production of oil. So there needs to be something else. And to fix this, it might take a long time. Mr. Lopez himself used to work for PDVSA or consult for PDVSA at one point or another. So he thinks, I think that the thought in the opposition is that, you know, this is what gets us through, and then we complement everything else with other measures. But the measures that they take would have to be slow. You're talking about, you know, as we said, depreciation. You're talking about, you know, opening up capital controls. You're to provide for investment. You need to bring in more dollars to the economy. You need to, you know, eliminate price controls. You need to do a number of things. And as Diego said, the amount of distortions is just mind-boggling here. This is a throwback to, you know, a quasi-communist transition era economy. And all transition economies, you know, when it's come to regime change, it's been a very brutal adjustment.
All right, well, if that's everything, thank you all so much for coming. Thank you to the panelists. I'm sure we'll see you all next year for Venezuela, the aftermath.